Hello and welcome to Money Control's live stream. You're watching a fresh new edition of Opening Bell with me, Lavisha Darad. And after we had a terrific Tuesday, it looks like we can have a wonderful Wednesday for the markets, given that the GIFT Nifty has been pointing out to a gap-up start for the Indian markets. Currently, GIFT Nifty has been showing a gap-up of about 100 points, and this is coming as US President Donald Trump continues to claim that the talks with Iran are underway and saying that Iran has agreed to never have a nuclear weapon. Though so far we have no confirmation of any of this from the Iranian officials on the same, and they continue to state that no talks have taken place. But Donald Trump says that he has been talking to the right people. That's what he's been saying. And he hasn't really mentioned who these right people are, and vaguely hasn't really offered any key details. But the markets have taken quite this well. Even the US futures have risen this morning after a tepid session that they had overnight. Asian markets too have been doing quite well. South Korea's Kospi has risen by about 3%, and that's leading the gains from the Asia Pacific markets. Hang Seng is up by about 2%, and even Japan's Nikkei 225 has also been up by about 1% itself. But before we move on, let's listen into this bite of the US President Donald Trump of what he has been saying, from declaring victory on the war front to negotiations, and even saying that there's a surprise for him. So listen in.
The turning point to make you want to pursue a ceasefire. A few days ago, you said you wanted to continue bombing Iran. Now you want to pursue peace talks. Was there something that happened?
The fact that they're talking to us and they're talking sense. And remember, it all starts with they cannot have a nuclear weapon. I said yesterday, they said, what are the top 10? I said, well, number 1, 2, and 3 is they can't have a nuclear weapon. And they're not going to have a nuclear weapon. And we're talking about that. And I don't want to say in advance, but they've agreed they will never have a nuclear weapon. They've agreed to that.
Are you going to send Jared Kushner and Steve Witkoff to do direct negotiations with the Iranians?
Yeah, well, we're in negotiations, as it turned out, and now you've seen what I said yesterday was exactly correct. We're in negotiations right now. They're doing it along with Marco, JD. We have a number of people doing it, and the other side, I can tell you, they'd like to make a deal. And who wouldn't if you were there? If we can end this without more lives being down, without knocking out $10 billion electric plants that are brand new and the apple of their eye, I'd like to be able to do that, But they can't have certain things. I mean, you know the things. I don't have to go over the list, but again, it starts with no nuclear weapons, and they've agreed to that. They did something yesterday that was amazing, actually. They gave us a present, and the present arrived today. And it was a very big present worth a tremendous amount of money. And I'm not going to tell you what that present is, but it was a very significant prize, and they gave it to us, and they said they were going to give it, so that meant one thing to me: we're dealing with the right people.
Is that nuclear related?
No, it wasn't nuclear related. It was oil and gas related, and it was a very nice thing they did, but what it showed me is that we're dealing with the right people.
All right, that's what the US President Donald Trump continues to claim, but very hazy, uncertain, no real details of who he's talking to and what he means by the surprise. But the surprise that Trump has been referring to could be Iranian officials allowing the non-hostile vessels to pass via the Hormuz. So we did see a tweet in this morning itself. What they mean by non-hostile vessels is that those belonging to or associated with other states who do not support acts of aggression against Iran can benefit from the safe passage, and this could be the reason why we have seen that oil prices have seen a sharp fall below that $100 per barrel. So yes, that's a full quote right on your screen, where an Iranian mission in New York has given out a safe passage of the non-hostiles via the Strait of Hormuz itself. But no confirmation so far on the peace talks. Apart from this, Iran's dismissal continues, the latest being Dr. Mohammad Fadil, who is the Iran's ambassador to India, saying that there are no currently negotiations which is underway with the US, either direct or indirect. And the claim seems to be manipulating markets. That's what he's been saying at this point of time. Trump even went to amplify on his Truth Social, saying that Pakistan's Prime Minister's a mediation offer on the Middle East crisis, where Pakistan said that they are ready to be the host to facilitate the meaningful talks for the ongoing conflict. And that's what the Prime Minister from the Pakistan has been saying, that they are ready to, be a host to the entire, resolution of what is going on in the Middle East in terms of US and, of course, when it comes to Iran at this point of time. So, yes, that's the Pakistan's minister's quote for you. We'll just flash in a bit. And, of course, amidst all of this, Israel continues to, vow against the strikes. We have Ruvain Azar, who is the Israel's ambassador to India, saying that we will do whatever we need in order to defend ourselves. So the fact that the president of the US has temporarily decided not to fulfill the threat of hitting energy sites doesn't mean that we won't continue to target military targets as we are doing so. So that's what he's been saying, that, despite the US halting the strikes for about 5 days itself, Israel is not going to do that because they are meaning to defend their targets, and of course they remain targeted to fulfill the threat of hitting the energy sites. So yes, that's what the Israel's ambassador to India has been saying. And back home, we also had Prime Minister Modi speaking to US President, saying that the talks were quite useful and they would ensure that the Strait of Hormuz remains open and accessible. Even Sergio Gore has supported the conversations that PM had with the US President, saying that the safe passage, and of course earlier we did see that Iran saying that they would allow the non-hostile vessels to pass through the Strait of Hormuz. And then we had Prime Minister Narendra Modi saying it over the tweet overnight that they have received a phone call from the US President Donald Trump, ensuring that the Strait of Hormuz remains open, secure and accessible, which is essential for the whole world itself. So yes, those were the key updates that came in from the West Asia. And amidst all of these talks of de-escalation with what US President Donald Trump has been claiming, the markets have been fairly resilient. If, like I was mentioning about US futures doing well this morning, even Asia Pacific markets have been doing well quite morning. And even GIFT Nifty is indicating a gap up start for the second straight day itself. So yes, that's the key update and how the markets have been signaling as of now. But before we move on ahead with the rest of the programming, let's take a quick check of what the top headlines are indicating at this hour. US President Donald Trump says talks with Tehran are underway. A Wall Street Journal report says US has also sent Iran a 15-point plan to end the war. Reports suggest mediators from Turkey, Egypt and Pakistan are pushing to have a meeting arranged between US and Iranian officials as soon as the next 48 hours. Meanwhile, Iran has just announced it will approve the passage of non-hostile ships through the Strait of Hormuz. Stocks on Wall Street closed the session lower as Donald Trump and Iran give mixed signals about ending the war. Markets in Asia Pacific open higher as Trump's latest comments signal de-escalation. Meanwhile, the GIFT Nifty is also indicating a gap up start for the Indian markets. Brent Crude trades below $100 per barrel amid reports that Washington was pursuing diplomatic efforts to end the war with Iran. Meanwhile, the gold gains 2% as hopes for an end to the conflict grows. Diageo's arm United Spirits announces it has entered into definitive agreements for the sale of 100% equity stake held in its wholly owned subsidiary RCB to a consortium comprising Aditya Birla Group, the Times of India Group, David Blitzer's Bolt Ventures and Blackstone's Perpetual Private Equity Strategy BXPE for a total consideration of 166 billion rupees. All right, those were the top headlines for you. But before we move on, let's take a quick check of the trades set up at this hour. Of course, there's an ever-shifting US-Iran signals. The Trump has been saying that Iran has agreed not to have the nuclear weapon. And he said that they have a big present, but for now, he's not going to disclose the details so far as of now. In the bite that we heard, he also mentioned that we will be having control of over anything we want, and he's been saying that he's in the best bargaining position amid the peace talks that he's been holding at this point of time. But Iran continues to deny the talks that Trump has been claiming, and the war has entered its fourth week itself. For the time being, US has also sent its 15 points plan to end the war. That's what reports have been suggesting. And they've been claiming that ending of the nuclear war weapons and, of course, opening of the Strait of Hormuz remains one of the key priorities in the 15-point plan that US has sent to Iran. But the tensions between Iran and US and Israel continues, given that Iran has said that US and Israel has struck the Bushehr nuclear plant again. And amidst all of this, Iran has allowed the passage of non-hostile vessels through the Strait of Hormuz. Amidst all of these developments, we've seen that Asian markets have done quite well. South Korea has been leading the gains from the Asia-Pacific markets. Japan's Nikkei has done well. Hang Seng has added in the range of about 1 to 3%. US futures have risen after a weak session that we saw overnight. And among the 10-year yields, that has surged by about 5 basis points to about 4.4%, while the Brent Crude has fallen by about 6% below that $100 per barrel. But yes, yesterday we did see that Nifty ending 400 points higher above that 22,900 mark. FIIs, however, they were the net sellers for the 18th consecutive session, selling stocks which was worth about 8,000 crore rupees in the cash markets. So yes, those are the cues, and of course, for the time being, how the trade setup looks like. But without much further ado, let's get in our experts to understand how all of these cues will impact our markets and, of course, what lies ahead in today's trading session. Let me quickly introduce Jatin Gedia, who's the Vice President, Technical Research of Teji Mandi. Good morning. And, of course, we have Gaurang Shah, who is the Senior Vice President at Geojit Financial Services, joining us also. Good morning, gentlemen. And what a flow of conflicting, confusing statements we are having and dealing with in the markets as of now. But yesterday turned out to be a good session. Hopefully turns out today also quite well for us at the time being. Jatin, I'll start with you. Clear short covering yesterday, and while Nifty briefly came above that 23,000, we ended below that mark. What is the next we can track from here on?
Yeah, good morning. So yes, more importantly, it closed above the high of the Friday's trading session when we had this huge gap down and the sell-off. So that is an important observation from our end, that closing above the high is a very important or a sign of no further selling pressure likely immediately. We are extremely oversold. I believe that this short covering rally or a counter trend pullback that the Nifty is undergoing as of now can extend towards 23,400 on the upside. Now 22,700 shall act as a crucial support for the Nifty. So overall, we are expecting this counter trend rally or the short covering rally to continue towards 23,400.
Okay, got it. Gaurang, your first takes on the market. Some relief rally yesterday, but we have back-to-back expiries. Today we have Sensex monthly expiry. How are you reading the market mood and, of course, the volatile swings that would come with it?
Thank you so much, Loisha, for having me on the show. Good morning to all your viewers and to you. A small disclosure, we may go into stock specifics, so all recommendations that I'll be sharing with you this morning on your show, they're a part of our fundamental research team recommendations. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest. But we give advice to our clients on similar lines. They might have their investment interests. If expiry today will keep the markets choppy. Of course, yesterday we saw the weekly expiry, but the news flows from the Middle East looks like keeping the market in a buoyant mood, Loisha. And I think today also you are likely to see a little bit of gap up openings as suggested by the XGX Nifty. My sense is that this being a truncated week, tomorrow we have an off because of Ram Navami, and then we get back to work on Friday. And then Saturday is the date which is, according to that intelligent president of United States of America, Mr. Donald Trump, the deadline of 5-day ceasefire expires. There are conflicting news which are coming. Iran is outrightly denying any kind of negotiation either directly with US or via any mediator. And while President Trump claims that there is de-escalation, yesterday we did not see any kind of de-escalation because Iran and Israel continued to fire missiles, drones, and unpleasant situation in the Middle East because of the kind of aggression that has been shown. So my sense is that if there is any decisive, and I don't think, Loisha, that this will happen very soon. It is wishful thinking, and we all know how slippery character or the statements are from President Trump. He has been shifting the goalpost even in this particular situation since the time this unpleasant situation unfolded in Middle East on 28th of Feb. First it was regime change, then it came to nuclear weapons, then it came to something else. Anything that comes from President Trump, I think we have to take it with a fist of salt, not with a pinch of salt. And unless and until there is a decisive statement from Iran, then only then I'll be satisfied. This is my personal opinion. Markets will recover, but sustainability is a big question mark because of the news flows. And any kind of bump up in crude oil prices, of course, they have cooled off over the last 2 days. But any kind of bump up in the crude oil prices is going to have an impact on our economy and our markets. So we need to be a little bit careful. While long term we remain optimistic, I think this is a fantastic time to cherry pick certain strong fundamental investment ideas. But from a short to medium term point of view, I think we need to be very, very cautious and careful.
That's right, because there's a lot of conflicting and confusing statements which is coming in from both the sides. But Jatin, your view, I mean, of course, we've seen that yesterday broader end of the markets also participated well. But clearly we can see that small cap index is in its bear territory. It's about 20% down from its peak levels. Do you think that we can bounce from these levels, and what lies ahead?
Yeah, see, definitely. We believe that there could be a counter trend rally. Again, I'm saying that it's only a counter trend rally and not a trend reversal. So, we believe that in the case of the Nifty small cap index, there is a scope for the index to, rise towards 14,900, 15,000 odd levels. But that would only be a bounce or a dead cat bounce that we can say. Overall, there are no signs of a trend reversal confirmation as of now. Yeah, so that is my view on the small cap index.
Got it. Gaurang, what's your take? Given that we have seen a sharp correction from both the mid and small caps, do you think that it's a buy at these levels? Jatin was indicating that it's not a clear trend reversal for this time being. But from a valuation standpoint, earlier everyone was arguing the fact that small caps have been trading at premium levels even at the current valuations. I mean, what's your take given the kind of meltdown that we have seen since the war has escalated? Okay, all right. There's a technical glitch which is coming in from Gaurang's feed. But, let's take a quick check of how the stocks and news pans out for today. Let's quickly toss to how, what the top news and, of course, what the stocks remains in focus for today. We'll first talk about Tata Steel. Well, the company has planned to invest about 1,600 crore rupees in its subsidiary, and they are planning to pick up equity stake in T Steel Holdings, PTE, and the investment has been aimed at strengthening in the global arm itself. Following this, we have TVS Motors, which will be in focus today as well. The company has approved a 12 rupees per share interim dividend, and they have declared about 1,200% payout for FY26, and this has been signaling some of the strong shareholder return focus itself. Following this, we'll be also watching out HDFC Life shares in focus today, given that the company has received about 126 crore rupees of tax demand and an additional 45 crore rupees of an interest which has been levied. No penalty has been imposed by the tax authorities for the time being as of now. Following this, we'll be also watching out how NTPC Green Energy stock pans out in today's trading session, given that they have signed a pact with Sectoral data and they are planning to explore the renewable energy projects. The focus has been on the green energy footprint for the time being. We'll also be having another renewable energy stock in focus. That's your Vari Energies. The company has approved about 39 crore rupees worth of capex. They plan to set up a new glass manufacturing facility, and they've also been raising a stake in a key subsidiary. We'll be also watching out for NATCO Pharma shares in today's trading session, given that the company has approved an agrochemicals demerger. The business is supposed to be spun off into an wholly owned arm, and the shareholders will be getting shares in 1:1 ratio. All right, that's NATCO Pharma for you. Let's move on to the next stock in focus. We have Seagull India, where the company has won 298 crore rupees of EPC orders. The contracts will be from Purva Green Power, and the projects will be executed in Andhra Pradesh for the time being. And finally, we have New India Assurance will be in focus today, given that the stock has got about 189 crore rupees of tax order, and the challenge will be on the assessment before the appellate authority. So yes, those were some of the top stocks which we need to keep under the limelight. In just a couple of minutes, we'll be also having the pre-open rates. But we've got the guest back. Jatin, yesterday we did see HDFC Bank rebounding, snapping its 4-day losing streak. Do you think this rebound can be sustainable now, given that lender has also formed a review committee to understand the reason behind the part-time chairman's exit?
Yeah, see, in the case of HDFC Bank, we don't see a trend reversal as of now, yes. But considering that it is part of the Bank Nifty and the Nifty, so some sort of short covering is definitely possible, which can take the stock towards 800, 810 on the upside. Now, there again, we'll have to assess the situation or the case for the Nifty and Bank Nifty. So that is the reason why I'm not calling it a trend reversal, but yes, there could be some amount of counter trend rally towards 800, 810 on the upside.
Okay, all right. That's the view for HDFC Bank, 810 on the upside. That's your take. Gaurang, what's your view on HDFC Bank? We've had experts earlier on the show who have always remained assertive, giving buy calls at the current levels. I mean, Jatin has also said about 810 on the upside. You think it's a screaming buy at that sub 800 odd levels?
Oh, I would love to scream from the top of my roof, Lovisha, as far as HDFC Bank is concerned. Yes, there has been an issue, but I think it's fundamentally sound stock. I don't think what has happened will have any kind of negative impact on the earnings. It is a short to medium term blip.
Okay, all right. Just a short to medium term level, of course, for HDFC Bank. And we'll watch out whether or not how the stock fares in today's trading session also. But yes, that's the first pre-open rates which is coming on your screen, where Nifty has opened with about 200 points above that 23,000 mark in the pre-open trade. Even Sensex is also doing well, about 500 points gain, which is coming in for in the pre-open rates. And if you look at HDFC Bank, like we were talking about earlier, with about 2.5% gains coming in the pre-open trades, L&T, Indigo, Eternal, Bajaj Finance, all of these counters continue to be doing quite well in the pre-open at this point of time. But we'll watch how the rates settle in for the time being. But yes, L&T in the pre-open also is doing well, and yesterday also it was one of the top Nifty gainers. Gentlemen, what's your take? Jatin, I'll start with you. The stock has been attempting to recoup its losses from the past couple of sessions, and yesterday it was one of the top Nifty gainers.
Yeah, see, in the case of L&T, there is a clear-cut trend reversal over here because it has closed above its previous swing high, and also we can see a morning star pattern developing on the daily charts. Apart from that, there has been a positive divergence. So all these technical parameters suggest that there is a trend reversal in the case of L&T. So now I'll be expecting the stock to run up towards 3800 to 3850 on the upside, where we have the 20-day average as the resistance. So from current levels, L&T is a buy from our end. You can place a stop loss at 3420 on the downside and expect a target of 3800 to 3850 from a short to medium term perspective.
Okay, all right. From a short to medium term perspective, Gaurang, your thoughts for L&T? Earlier, you mentioned that you want to, scream on the top of the roof for HDFC Bank. What about L&T? Is this a screaming buy for you once again? And do you think the worst of the sell-off is behind?
Oh, if I could climb a couple of more floors, I would definitely do that and again scream from the roof, Lovisha. So Aloy, the problem with this kind of market is that people, unfortunately, start timing and pricing whether this is the right time or the right price. And historically speaking, Lovisha, whenever these kind of geopolitical situations have started to de-escalate and normalcy has returned to those regions, markets have given you a phenomenal return. And most of the time, I think you may end up making a new all-time high. Given the valuation, given the attractiveness, and the fact that L&T management, I think about a couple of days back, came on some of the media channels. Yeah. I believe it was our own channel, CNBC TV18 also, and sister concern channels. And they said that, yes, they have 35% plus kind of order book in the Middle East, but only one or two of the projects which are in the sensitive zone where the work has stopped. But naturally, you don't want to lose life. You don't want to, incur more losses. I think 4,400, to be very honest with you, Lovisha, is the target, is the conservative target according to me, approximately 4,400. And from these levels, the risk reward is extremely favorable. So yes, this one is also a screaming buy along with couple of other names.
Okay, all right. So it clearly marks that, we can see about 20 to 25% upside from the current levels itself. But before we move on, let's get your top trades for the day. Jatin, I'll start with you. What is your top trade for the day itself? And of course, what looks attractive in this markets, which is attempting to rebound from the meltdown that it has seen since the war escalated?
Yeah, so we are looking at some of the relative outperforming stocks which have fallen the least in this free fall that the broader market has seen. So Laurus Labs is one stock that we have identified from the pharma pack. On the pattern wise, it has formed an inverted HNS pattern, which is a trend reversal pattern. Yesterday, did give a breakout, and I am expecting levels of 1040 from a short term perspective in the case of Laurus Labs. One should place a stop loss at 970 for this trade. So Laurus Labs is one stock. Apart from that, Cummins India is another stock that we like. Cummins India, in terms of pattern, it has formed a bullish flag pattern. I'm expecting a breakout in today's trading session. Yesterday, it did manage to close above its 40-day average. So that is a sign of short-term strength. We are expecting 4,800 on the upside. One should keep a stop loss at 4570 on the case of Cummins India. So Cummins India and Laurus Labs are long trades from our end.
Okay, all right. Cummins India and Laurus Labs, these are the top trades for the day. Gaurang, let's take your views also. What's your compounding idea for the day itself?
So other than the, L&T and HDFC Bank, Lovisha, my list is very long, but I'll try to keep it short. So I think now that you are having a little bit of positivity, but there is a lot of uncertainty. And Lovisha, in this kind of time, my sense is that investors should look at sectors which are relatively insulated or less impacted by the current ongoing situation or rising crude oil prices. And with that perspective in mind, I think healthcare is something that is relatively insulated from any kind of external shocks, either in form of aggression or in form of boiling crude oil prices. So we have one investment idea over there, and in the healthcare segment, I mean, of course, there are a lot of them. One of them is Narayan Hrudayalaya. This stock has been a performer over the last couple of months and at least a year and a half. And my sense is that the opportunity is tremendously on the positive side and the risk reward is favorable. So Narayan Hrudayalaya is the investment idea from a long-term point of view, of course. So start at current levels and add-on dips would be the strategy.
Okay, all right. Those are the compounding ideas for the day. And thank you, Jatin, for your time and of course for joining us. But Gaurang, I'll stick with you here. I mean, yesterday we did see that paint stocks, they were buzzing in the day. We have the new price hikes. Asian Paints announcing that 6 to 8% price hike effective from April 10 in a two-phased manner. Do you think that's enough to offset the profitability impact that they might see on the back of these rising crude prices?
So at least the beginning is done, Lovisha. That's the positive side, right? Because Asian Paint and likewise Berger Paints and Kansai Narrow, as a disclosure, Lovisha, we have coverage on all these three names from the fundamental side, from a long-term point of view. And these were the stocks which got terribly negatively impacted when the Birla Opus came into the market with cutthroat prices and discounting. It did manage to get a little bit of market share, but then of course now we are talking about, I think, JSW Group and Akzo Nobel, if I'm not mistaken, talking about some kind of merger or takeover. These are all source-based information, Lovisha, so I am not too sure about how strong the news is or how positive the news is. But the fact that Asian Paints happens to be a leading name in the paint sector. It is present in India and in overseas market. Yes, it did suffer a lot because of disturbing numbers or disappointing numbers which are below expectation. But my belief is that with this price hike and the ability to scale the business upward and the positivity in terms of consumption, whether it is new order market or replacement market. And one more thing, Lovisha, I think a lot of people believe that most of the products that these paint companies make are oil based. Over the period of time, because of technology, they have shifted from oil based paints to water based paints. So the rude shock of crude oil prices boiling on paint companies is not as severe as it used to be couple of months, quarters or years back. And of course, these companies have long-term contracts. So it depends company to company as to when the contract expires, whether it is near about the boiling crude oil prices or otherwise. So positive on Asian Paints, Kansai Nerolac and Berger Paints.
Okay, all right. That's the view for the paint space itself. But let's get in your view also on the power sector. We've had an interesting brokerage note today where Bernstein has initiated outperform calls on Adani Power, JSW Energy, Tata Power. They've been saying that like China, India has been resource poor in terms of oil and gas, but they are resource rich in terms of coal and solar. And that's why they've initiated such ratings on all of these power counters. We've seen that last year they were one of the top laggards in terms of sector-wise performance. This year, relatively, they have been faring well. Do you think the near term and, of course, the medium term looks promising for the entire power stocks?
Oh, very promising, Lovisha. And my belief is this is also one of the sectors which is, like I mentioned about healthcare, relatively insulated from the rude shock of rising crude oil prices or natural gas prices to a certain extent. And the fact is that, yes, power consumption is going up at individual level. India has got aspirations to become one of the largest manufacturing hub. India has signed almost about 8+ FTAs with different countries. So in the next 2 years, 3 years, 5 years, we are going to need additional power generating capacity. And as it is always known also that India has been power deficit, Lovisha. Since the time we got independence, even now, there are certain parts, certain geographies in the rural part of India, far away, fetched away places where power supply is not there for 24 hours. In the next 3 to 5 years, government has lined up 300 gigawatts plus kind of new additional power generating capacity, Lovisha. 75% of that is going to be renewable, clean and green. And yes, along with solar, wind generation is also something that the government is focusing on. Tata Power, NTPC, Torrent Power, JSW Energy. These are some of the names in the power generating pack. I would also take another 30 seconds more, Lovisha. If you're positive on power, then you need to be positive on power transmission and distribution. And over there is a company called Power Grid. Again, a PSU company, 75% grid network pan-India. So that will benefit. And modernized power equipment manufacturing companies, for example, ABB, Siemens, KC International. You need to be positive on these names as well.
Okay, got it. So you are quite bullish on the power sector. And we've got a range of sectors and stocks from you today. But on that note, we have to let you go. Thank you, Gaurang, so much for your time. And of course, listing out the promising sectors that you're looking at this, volatile times.
Thank you, Lovisha. All the best. Bye-bye.
Bye. All right, definitely in the pre-open rates, we are suggesting that the markets will be opening once again into positive news. Nifty has been climbing above that 23,000 mark in the pre-open, and of course Sensex also has gained about 100 points itself about for the time being. But, let's move on with our next set of conversation. We have Peter Maguire joining us to understand how the crude developments and of course how the global markets have been reacting on the back of this news flow. Peter, good morning. First thoughts on the markets, of course, about the conflicting opinions that we have been having in terms of US and what Iran has been saying. But we have seen that crude has been extremely volatile, once again below that $100 per barrel. So how do you read these conflicting statements which is coming in from the West Asia?
Well, good morning, Lovisha. I think it's so interesting because price is really the determinant. That's the barometer. And as we've seen, you've got now WTI under $90 at $88.80, and we've got Brent sitting under 100 at $99.60. So first thing, price and volatility, metals have taken a run up, and it seems to be very much a downward trend at the moment. We're looking at mediation and talks tomorrow between the Trump administration and naturally US versus Iran. And let's see that 15-point plan, whether it's going to be adhered to, how it's going to be discussed, and it's very much live and dynamic as we look at it at the moment.
Got it. But Peter, we are seeing a strong US dollar, elevated bond yields, even US 10-year bond yields was above that 4.4% mark, volatile crude prices. I mean, how are you interpreting this cross-asset setup which is going on?
Well, US dollar index running at that 99.25 sort of handle, and it's above 99 at the moment. And as you correctly said, US bonds, as far as the 10-year and the 2 years at 386. So I'm expecting either bonds to take a little bit of a softness over, just depending upon what happens as far as this 15-point plan. And it's very much a work in progress. We've had a big run up as far as gold in the last matter of Asia trade today. Asia equities are well up as well. So the positioning is going to be, I think, one of nervousness, how this all unpacks. And it's going to be, again, volatility is going to be the name of the game between now and when the markets close Friday night in New York.
That's right. It's been a headline-driven markets at this point of time. We have some, 15-day point plan. That's what he's been sending to, Iran. And then we have Iran denying all of these statements. I mean, how should investors position amidst all of this kind of uncertainty which is going on?
Well, that's the name of the game as far as volatility, and that's the uncertainty with war. And of course, you've got war premiums built in, you've got news, you've got market sentiment. All of these factors create one thing, and that's big price moves. And that is just extraordinary what we've seen in the last matter of, a couple of weeks. It's just been all the way to $121 for crude. Now you're looking at that, as I mentioned, under 90 for WTI, under 100 for Brent. I think it's going to whipsaw, and traders have got to be very, very concise and don't get, I just think you've got to be very, very mindful because of big volatility swings. You can be taken out very, very quickly.
That's right. All right, Peter, hold on. We have the markets just opening for us, and we'll just address the opening rates for India. We have Nifty, which is opening quite smartly today. Once again, Nifty extending gains to the second consecutive day, up by about 200 points and nearly 1% gains, which is coming in on an index level. Even Sensex is opened quite smartly. You can see about 600 to 650 points gain coming in for Sensex. Bank Nifty also doing well with about 700 points gain, and the broader end of the markets continue to remain resilient to the second day as well. Nifty mid-caps up by about 700 points, and if you look at the small caps pocket, that has also been doing well with about 1% gains. The fear gauge continues to cool down for the time being, given that Trump's remarks on de-escalation continues to get priced into the markets. And of course, we have seen positive global cues that we have started off with. So India VIX easing by about another 7.5% below that 25-odd levels for the time being. And among the sectoral indices, a majority of them have opened with good set of gains, barring your Nifty FMCG for the time being. Nifty IT index, which is open with a bit of a negative bias with about 0.3% decline coming in for there. Apart from that, you can see Nifty FMCG has done well. Nifty Auto with about 1% gains coming in for there as well. Nifty Realty has opened with 1% gains. Consumer durable stocks have been doing well. Metal stocks have also taken up quite well. So yes, all in all, you can see majority of the sectoral indices have been doing well. But IT index has been feeling the heat once again. You can see Nifty IT index down by about 0.3%. But yes, let's take a quick check of how the gainers and losers look like on the Nifty 50 for the time being. You can see among the top Nifty gainers, Shriram Finance doing well with about 3% gains. Apart from that, M&M with about 2% gains. Bajaj Finance has been doing well with about 2% gains coming in for there as well. Eternal seeing good set of gains with about 2%. Adani Enterprises, Ultratech Cement, Tata Motors Passenger Vehicle also remaining one of the top Nifty gainers. And amongst the losers, you can see that the tech stocks have been dominating the laggards chart, and that includes your Tech Mahindra, HCL Tech and Infosys. So all of these three Nifty IT majors remain one of the top Nifty laggards for the day, seeing a decline of about up to 2% for the time being. Apart from that, you can see TCS also plunging in the trade, ONGC, Wipro, Tata Consumer, Cipla also remaining for the time being the top laggards at this point of time. But let's get back to Peter into our conversation. Peter, of course, we've seen, second day of winning streak for India. But in your view, what are the biggest markets risks for India, given that crude has been lingering around that $100 per barrel?
Well, the energy side of things is the number one concern, Lavisha, and we can't take our eyes off that. That's that the impact is going to be felt not only in India, but again across all of Asia. So we have to see, as far as shipping, whether this particular plan, this 15-point strategy, is going to be adhered to, and whether we're going to see a resumption as far as crude exports through the Strait of Hormuz and ferrying those oil tankers all the way through to India and, of course, to Asia. So there's the number one concern. And I think until we get some sort of green light on that, there's going to be continued volatility. We'll have days where they're up and days where you're down. So I think the focus very much at the moment is going to be very much centered on, one, an end of this conflict, and secondly, a resumption as far as trade, gas, and naturally all fuels going through the strait.
Okay, got it. Peter, we had Iranian mission in New York saying that they have allowed non-hostile vessels to pass through the Strait of Hormuz. Do you think that the worst of the conflict in terms of oil price swings could have already been baked in? Earlier, we did see oil swinging back to about $120 per barrel. Is that a less likely scenario for the time being?
Well, at the moment, yes, and because of the positioning, Lavisha, in the sense where these talks, we're going to see, but there's nothing on the table. No one's got any idea what are the 15 points. But this time tomorrow, or certainly during Thursday, we're going to hear as far as the success or failure of that. And that is very much determined upon, if it is successful, I'm expecting crude prices to trade lower from here. And if it's not, I'm expecting volatility to really kick in, and of course a return to upward trend as far as crude prices. So that's where we're sitting. It's very much a wait and see approach, and that's what trading's all about. You've got to be very conscious as far as the fundamentals, and of course what's happening from, I think, that geopolitical standpoint.
Got it. Peter, specify us a range from where you see crude to be trading. Right now it's at about $99.5 per barrel. But what's the trading range that you're working with?
Well, I think anywhere between 90 or 85 to about 120. I know it's wide, but that's anything can happen. You can see a softness, Lavisha, get into the market, and we can trim $10 or $15 out in war premium within a matter of hours. Or it might be a trading session, or you can see things resume to the upside, and that's what the market doesn't want. The market or the consumer does not want a return to the volatility. It wants softer prices and everything to get back to the status quo as far as resumption of trade through the Strait of Hormuz.
Okay, got it. But can we formidably, for the time being, rule out that 120 is like a less likely scenario for Brent to go back again?
I would think. Yeah, I think it is. It's less likely, but I'm not saying, you've only got to look at from I think from a numbers perspective, what you would, the expectation, it can certainly get there, but I'm going to say that it's not that likely. But again, it all hinges on the success or failure of these talks between the two sides and how quickly things can, I think, move forward. But anything can happen when you're looking at, from a volatility perspective.
That's right. Peter, what about gold? I mean, sharp correction despite the inflation fears and the war geopolitical tensions which is going on. I mean, is this telling us that the market is more worried about Fed's hawkish stance from here on?
Well, I think a couple of things. First off, when we saw that the first weekend, when as far as this conflict 3.5 weeks ago, gold was at about 5,250. Then on the Monday, it went to 5,400. It went down to about 4,300. It's up 4% in Asia trade today. So I'm expecting the market to, have another rally to the upside as far as gold prices, put another 100 or 200 on. But again, that's very dependent upon Fed rate policy, what's happening as far as US dollar and bond yields, and of course, nervousness across the economic situation globally. All of these factors have got to be I think inhaled and digested and really respected.
What about for gold? Any specific range that you're working with?
Well, I think around about that 4,400 up to about 4,800. I want to see conviction. I want to see whether it breaks out of that 4,800 to the upside, Lavisha, whether it does that with a commanding presence or it does it, very, very weakly and with no strength at all. It just softly trends up there because the market has certainly been, I think, oversold. And it's, again, very, very dynamic. There's a lot of big moving parts associated with the gold and silver market. So one's got to be very conscious of them and, I think, have your hands very much on the keypad and have your eyes on the screen because things happen extremely quickly.
But as we speak, we've seen that on the MCX, gold has once again seen an uptick of about 3% itself. So yes, that's a positive cue which is coming in for the commodity markets. But Peter, in terms of valuations when it comes to India against the emerging markets, we have seen severe fall since the war escalated and so far this year also. But FPIs, they have been continuous net sellers for the 18th consecutive day. I mean, in terms of, are we still going to see that for the time being, given that the India's valuation against emerging markets are yet to cool off?
Well, I think first off, we've just got to work through this war situation, and because there are, again, many moving parts to this, and its market sentiment is concerned, there is a lot of nervousness out there. So I'm feeling in margin calls, of course, traders have got to be conscious as far as the whole landscape. But if we see things turn into a better situation, not a worse situation, I'm expecting Asia equities to rally up and certainly Indian equities as well. So that's the short prognosis. But the other side, of course, is we've just got to see how all of this trades over the next, 3 to 4 trading days will give us a very good indication as far as market sentiment and as far as risk appetite.
Okay, got it. All right, Peter, with that, we have to let you go. But thank you so much for your time and joining us.
Thank you, Lavisha.
Thank you. And of course, the markets have been doing well on the back of this. Sensex is up by about 800 points for the time being, a percent gains coming in for there. And Nifty has been well above that 23,200 odd levels. So yesterday we did briefly slip below that, briefly reclaimed that 23,000 levels. But today we can affirmatively say that we are above that 23,200 odd levels for the time being on the Nifty 50 index. But yes, the IT index, that continues to remain one of the top sectoral laggards for the day, and all of the sectoral indices have been swimming in the green, which is being led by metals, banks, autos. All of these counters have been doing quite well. PSU banking index particularly has been doing quite well. If you look at Nifty PSU banks, that has been doing quite well with about 2% gains coming in for there. Even Nifty Realty, for that matter, soaring in the trade with about 3% gains for the time being. And from the broader end of the markets, even the mid caps and small caps, both of them have been showcasing good set of gains with about 2% at the time being. But before we move on to our next guest of the show, let's quickly toss in to the top brokerages and, of course, what the street has been picking out for this hour. All right, so those were some of the top brokerages for you. But let's move on to our big market voice segment. We have Manoj Baheti, who's the founder and fund manager at Carnelian Asset Management, joining us for the time being. Manoj, good morning. So good to have you with us. I'll point out three statements which is causing the relief rally. First is your Trump's claim of the peace talks with Iran. And then we have mediators pushing in for US and Iran talks. And then we also have Iran saying in that the non-hostile vessels can pass through the Strait of Hormuz. So can we say these are the first signs of de-escalation when it comes to the Iran conflict that has been going on for the fourth consecutive week?
Good morning, Bhavisha. I think yes, the last 2 days we have seen many positive statements. In fact, it started from Trump when he started with 5 days pause, and thereafter he has also stated that the talks are happening in a progressive manner. Initially, Iran has declined that, but Iran has also started accepting now that yes, the talks are going on. So definitely, it is a very, very positive move from both the sides, and I think both the sides have realized, especially US and all, that if this kind of war it is going to create a permanent disruption or a long-term disruption to the energy assets, it is not going to it is not going to do good. Like if they are going to take out any kind of energy assets for next 3-5 years, I think world, especially the Western world, is not in position to absorb that shock, because crude oil sustaining anywhere above $100, the economies across the world are not tuned to absorb that oil shock.
Got it. And Manoj, as we are speaking, Brent has once again come up above that $100 per barrel itself. It's lingering. It was lingering around those levels, but we can say that it is back above that 100 for the time being. I mean, what do you think the strategy should be here? Because markets currently are a completely headline-driven news. There's intense volatility when it comes to the war in the West Asia. Do you think investors should wait for the time being before building on positions, or sell on every bounce? What's your take here?
So, Anavisha, not at all sell on every bounce.
Yeah.
This is a time to build definitely a quality portfolio, and we have seen like these kind of events in the past also, like even like last Middle East war, when crude oil has gone up almost 3x. Even Russia-Ukraine war, initial reaction was very much negative. But once the event passes, dust has settled down, then all investors start looking at fundamentals. So I think this is the time definitely to look at fundamental and selectively keep on deploying the money, not maybe at one go, but I think it means investors can use a STP kind of route where they can keep on deploying money on every dip while keeping a close watch on the situation. Only one thing which we are worried right now is whether this kind of means this is going to create any kind of a permanent loss to the energy supply sources of the world. And I think even everybody realizes that if they are going to destruct or destroy the energy sources, it is not going to do good to anyone. So I would assign a low probability to that, but in war, anything can happen. But as of now, I think India's macros, India's fundamental as well as valuations are well placed. India's macro parameters are even better than most of the countries in terms of low leverage, low inflation, though we are energy dependent economy. So the higher energy prices, higher crude oil prices definitely is going to have a short term impact. But once it settles down, I think fundamentals prevail.
Got it. But Manoj, any earnings impact that you're estimating for FY27? Of course, it depends on how long the war prolongs for the time being. But are you revising the estimates for FY27 that you were working with earlier?
So, Navisha, definitely 1 or 2 quarters there will be a earning impact. the way the supply chain got disrupted, the way the crude oil prices have moved up, the way the exchange rate has moved up. So definitely next 1 or 2 quarters, we will see the impact on the earnings will be there. But once I think the supply chain stabilizes, the earnings will come back strongly.
Okay, got it. Manoj, in your March fact sheet, you have mentioned that oil and gas remains as your contra bet. I mean, explain us, sir, what is keeping you positive? And of course, do you think that this war, of course, for the timing, it's showing some signs of de-escalation, but oil and gas is expected to see a significant earnings cut given that oil still remains above that $100 per barrel?
Oh, I think it is a mixed one, Lovisha. Few of the companies where who are seeing the GRM uptake. I think there it will be a positive. Even the inventory gains will be there. That will be positive. But oil and gas, it is there in one of our contra strategy. But other than that, we don't have much large position in oil and gas.
Okay, got it. Another has been IT stocks. I mean, what are you watching in terms of the Q4 results? And going forward, given that the sector has seen stocks getting re-rated below its long-term averages, are you finding it attractive at the current levels? And how are you placing it against the AI narrative? Do you see pricing pressures that will emerge eventually for the sector?
Yeah, I think short term, the impact will be negative for the IT companies. But last month, we have written a very, very detailed piece on AI, whether it is transformative or disruptive. So our view is that select IT companies will play a key role in AI implementation, because I think till now the investment has happened across 4 layers of AI, including AI layer, energy layer, cloud layer, and all. And but the biggest ROI happens in the application layer, and in the application layer, I think Indian IT companies will play a key role in taking the AI to the masses, especially when many of the enterprises are not, means that data in the current structure is not in a position to deal directly with LLMs. They require serious amount of data engineering and a serious amount of handholding. And along with that, I think cyber security also comes as a big opportunity. So I would say that Indian IT companies which are adapting themselves, which are preparing themselves, they will see AI as an opportunity rather than as a threat. But all said, I think over next few quarters, whether AI can be deflationary for Indian IT companies, answer is yes. The other thing is whether it is already in the price. Looks like the way the IT companies have corrected, looks like that already that kind of fear is in the price. But over medium to long term, I think Indian companies will play a decent role in AI migration.
Okay, got it. But Manoj, traditionally we've seen that IT companies growing by about 6 to 7%. But now with the AI news and of course how the narrative has been panning out, we could see some pricing-led pressure. I mean, at this point of time, do you think the kind of valuations all of these IT companies have been trading with and the kind of growth that they might deliver for the next few quarters, is that going to be supportive of the valuations that they're trading at the current juncture?
I think if we look at the current deal wins has been decent. Even the growth trajectory, I think there has not been much disappointment in the short-term growth trajectory. But over the next few quarters, whether it can be deflationary in terms of revenue, answer is yes. But over the medium term, I think even if it is deflationary in terms of the revenue, I think the efficiency gains which will accrue to the customers will be eventually shared between IT companies, customers, and even the AI generators, the LLM owners and all. So overall, I would say that the profitability growth over medium to long term will be higher than the revenue growth for IT companies.
Okay, got it. So IT is something that you're bullish on. Manoj, Any other thematic
No,
bets for the time being?
Novisha,
Yeah.
we are not bullish on IT sector as of now. We are watching it
Okay.
cautiously. But what we are saying that the way the valuations have corrected, this
Hmm.
is not the time to sell IT companies. But I think the select IT companies which are going to transform their business models, which are able to adapt the AI in terms of delivering solutions to the client, I think they will stand out over medium to long term vis-a-vis other IT companies. As far as our fund positioning is, we are around underweight, equal weight on IT stocks.
Okay, got it. But if you had to choose between large and mid caps, of course, mid caps have done well earning wise. But large caps, how are you viewing it?
Yeah, I think in this everything got corrected. But I think few of the mid cap companies they will be better positioned to transform their business model in terms of AI. But I think some of the large cap companies like Persistent, Coforge, and all, I think they are also very well prepared in terms of adaptability of AI and all. Even HCL Tech, Infosys. I think these companies have invested good amount of their efforts and as well as in building solution on the AI side.
Okay, got it, got it. But apart from IT, I mean, of course, you're remaining underweight on the sector, but anything that you're overweight, and in this, market meltdown that we have seen and the kind of correction that we have seen, anything where you're finding value?
I think we continue to like BFSI. The way the BFSI stocks have corrected, in fact, I think whenever this kind of correction comes, I think
Yeah.
investors generally try to sell wherever the liquidity is available. So BFSI sector, despite of a very, very good credit growth, despite of a very good asset qualities and good ROEs and all, I think they have corrected. So BFSI is one of the space where we find value, and we keep on buying BFSI stocks on dips. And the second space where we continue to remain positive on the manufacturing sectors, especially CDMO, pharma, healthcare, auto ancillaries, capital goods ancillaries. So few of the manufacturing stocks, I think their short-term earnings, maybe 1 or 2 quarters earning, may get impacted because of the current supply chain disruptions. But I think once it gets over, we see a very, very big opportunity on the entire manufacturing BFSI space in India, as well as capital good ancillaries.
Okay, okay, got it, got it. Those are the top bets for you. All right, on that note, we have to let you go, Manoj, but thank you so much for your time and joining us.
Thank you, Raj. Bye-bye.
Thanks. Of course, you can see the markets, they have been fairly resilient today, and of course, Sensex is up by about nearly 900 points. Nifty has been doing well above that. 23,200 mark. It's been holding those levels quite firmly from where we started off in the open. And from the broad end of the markets, even mid caps and small caps have been doing well with about 2% gain. So mid caps, you can see a little bit of a cool off from the day's high levels for the time being, 1.5% gains coming in for there. But small caps continue to stand tall with about 2% gains. But yes, like we were discussing with Manoj earlier about IT stocks, revenue deflationary on the back of the AI-led impact is something that we'll be watching out. And for the time being, you can see that the Nifty IT index remains one of the top sectoral laggards of the day, seeing a loss of about 0.5%. But apart from that, you can see all of the major sectoral indices have been trading in the positive territory. Metals have been doing well. Pharma stocks have been, exhibiting good positive gains. And Nifty Realty remains one of the top sectoral gainers of the day with about 3% gains. So yes, all in all, it's a positive setup for the markets. And we'll be watching out whether or not the gains sustained throughout the day is as well, given that it's also the Sensex monthly expiry. So some volatile swings could be observed in the second half, but we'll be watching out how it pans out. But for now for the time being, it's a wrap for this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll be discussing about how the market is developed and also be discussing about key stocks of the day. So it's a wrap from me, but do stay tuned to Money Control.